Hello, hello, hello. What's up, money makers? Happy Friday. We had a sell-off earlier today, but the market seems to be making a V-shaped recovery, so I wanted to make a quick video to update you all on the price action and go over some of the stocks that you mentioned in the comment section of my previous video. But please note that I am not a financial advisor. This video is for entertainment purposes only, so let's get started by looking at SPY, ticker symbol SPY. So SPY seems to be in a very nice bullish trend since March of last year. As you know from my previous videos, I have this white trend line, which is acting as a solid area of support. Since March of last year, the price bounced here in March, bounced here in October, bounced here in January, and is bouncing off of this support line right now in February. As long as we stay above 380 today, I think we're looking quite bullish. We're well above the 50 and the 21-day exponential moving averages, which is also a really bullish sign. Let's have a quick look at the diamonds, ticker symbol DIA, which follows the Dow Jones Industrial. We seem to be forming a rising wedge on the daily candles here, which is quite bullish near the apex of the triangle. However, I do see that we are bouncing off very nicely off of the 50-day simple moving average, and we are inside the triangle ready to pop up. This is really good to see. I hope we close over the 21-day exponential moving average. That would be nice to see as well. But we are looking quite bullish. Looking at the tech ETF, the triple Qs that follows Nasdaq, seem to be in a rising wedge similar to Dow Jones. However, we did break down on heavy bear volume yesterday, which is not so nice to see. We broke down, bam, right through the white trend line, which acted as support previous couple of times. We seem to be forming a triple bottom here at the 310 level, which could be a reversal pattern. I really hope we close above the 320 level, so we're back in the triangle, and that would turn this into a bullish scenario. If we do, however, close below the yellow 50-day simple moving average and the white trend line, which is below the 320 level, that would be bearish to see. Techs have rallied up quite a bit since March, so I wouldn't be surprised if we see a little bit of a correction there. Let's have a look at IWM, Russell 2000, the small caps. So again, yesterday we smashed right through the white trend line on heavy bear volume. We seem to be coming back to retest the trend line. This is not looking too bullish to me. Keep in mind, small caps are leading indicators of the markets alongside financials, so this is a bearish sign. We did have a very thick, heavy red candle yesterday. That is also not a good sign. Let's have a look at the financials, see how the banks are doing. All right, so we did pop above this channel right over here. So the price did pop up about a week and a half ago on decent bull volume, and we have been climbing up and away. We are well above the moving averages as well. Financials are looking solid, really bullish on the financials. Let's have a look at silver. So SLV looks quite bearish to me. Whole lot of nothing. We're definitely not bullish here. We are in this channel, just moving along, chugging along sideways. The moving averages are coiling up. We did fall below both of these moving averages today on pretty high bear volume. So as of today, it's quite bearish, but this is something I would just stay away from, as there's not a lot of action here. Looking at GLD, the gold ETF, very nice leg up, climaxed right around here in mid-July, and since then we have been steadily falling sideways. Not much happening here as well. I would stay out of gold for now. Let's have a look at US dollar, which is usually inversely related to commodities, precious metals, and the stock market. The lower the dollar, usually the higher the stock market. All right, so we have been falling, bear flag falling, bear flag falling, bear flag falling, forming a bear flag right now. I think we're at the verge of another fall. The US dollar does look quite bearish, which is bullish for the market, so that's really good to see. Let's have a look at Bitcoin. All right, so Bitcoin had a nice leg up, consolidated sideways, bounced off of the 50-day simple moving average. Boom, right up there. Fell, consolidating sideways. Let's have a look at the candles, and we seem to be forming a base right around the 21-day exponential moving average. This is quite bullish to see. I'm expecting Bitcoin to pop from here. It is looking quite bullish to me. We have a nice hammer candle today. That's another good sign. Let's have a look at Ethereum. Ethereum. Okay, so on Ethereum, we did break the rising wedge. Here all the way here. So as you can see, we were forming a rising wedge. We did break it on February 22nd on a very, very high bearish volume. We slipped right through the 21-day exponential moving average, almost cracked through the 50-day simple moving average yesterday, but we seem to be forming a hammer candle right around the 50 mark. Similar to Bitcoin, this did act as a solid area of support in November of last year. We had a double bottom on the 50-day simple moving average in December, and the price is right around there. In my opinion, this is a great buy opportunity on Ethereum. I am long-term bullish on it personally, so I would definitely call it a buy at this level. But please remember, I'm not a financial advisor. This is for entertainment purposes only. Now let's look at some of your stocks of interest that you left in the comment section of my previous video, starting off with Churchill Capital, which is a SPAC. I called it a sell on February 18th. As I saw a shooting star, the price fell, boom, right through the moving average and seems to be consolidating here. This does look like a bear flag to me. I maintain my sell on this one. I'm not looking to buy CCIV anytime soon. Let's have a look at STPK, Star Peak Energy Transition Corp. I am bullish on this one. We do have a double bottom here at the 50-day simple moving average. Nice hammer candle over here. This is looking quite bullish to me. Moving on to CPSH. CPSH bounced right off of the 21-day exponential moving average, similar to February 2nd. This is looking quite bullish. We are already up and away. This is absolutely a buy at this level, in my opinion. Moving on to CleanSpark, ticker symbol CLSK. I called it a sell on February 22nd. As we did pop out of this pennant formation, but we fell right inside it. This is quite bearish to see. It's called a death hook. So I called it a sell, and guess what? We fell and are falling. We are also below the moving averages, so this is double bearish. I am not bullish on CLSK as of now. Let's have a quick look at Golden Nugget. Golden Nugget. So we were in a falling wedge until February 19th. We were supposed to go bullish, but we fell right through it on heavy bear volume. So I called it a sell on that day, and since then we have been crashing and burning ever since. Fubo TV, again, this is a sell in my opinion. We are well below the 2 moving averages. Earnings are coming up in a couple of days as well, so please be careful. I'm not seeing much action here. Price seems to be going sideways towards the downside, so this is nothing pretty to look at. Last but not least, BNGO BNGO or Bionano Genomics. Up, consolidated sideways, up, consolidated sideways, up, failed to go up, boom, fell right through, and we are just consolidating right underneath the 21-day exponential moving average. I would want to see the price climb above this moving average for me to perhaps go bullish on this, but as of now, it does not look bullish to me. Thank you for making it to the end of my live stream. If you'd like me to cover a stock in my next video, please leave it in the comment section below. Have a nice weekend.